Hello, and welcome to our Market Alert video for today, which is April 14, 2023, and it is almost tax day. Yikes. I hope that this video reaches you in perfect health and great happiness, and we hope that financially all is well with you. I have a lot to get into with you, but first, want to give you a quick update. Last weekend, of course, was Easter weekend, and my grandson, we went to visit. He's a year and a half, and it was his first Easter egg hunt. And he was in the 5-year-old and under category. So he was out there with kids that were up to 5 years old. And that young man needs a little coaching up. I mean, what he didn't understand is it's a dog-eat-dog world out there. You got to box people out. You got to go for the gusto, man. I mean, he was about to pick up an egg, and this 4-year-old girl just swooped in, grabbed it right out from under him. He didn't even see it coming. We're going to have to coach that boy up. Next year, it's going to be a different story, let me tell you. So anyway, I hope you guys had a great Easter weekend. Let's talk about what happened this week. So we got the inflation numbers that came in, and of course, as we said they would, we said that inflation would drop under, we said we'd go around 5.5%. And of course, it was more than that. It went down to 5%. And as we've described in previous videos, we think that the inflation rate will be under 4% when they announce the inflation numbers for June in July, because they always announce it a month later. So why is that? Well, because it's just math. If you look at what the inflation change was from February to March last year, it was 1.33%. This year, the change from February to March was 1/3 of 1%. So you drop off last year's 1.33, you add on this year's third, and you're left with a reduction of 1%. So the inflation rate went from 6% to 5%. It's just math. Now, what's going to happen over the next 3 months is that we're going to be comparing to last year's inflation when it actually got higher. It went up to almost a 16% annualized inflation rate. We don't think that's going to be the case this year, and therefore the headline number inflation we think is going to continue to drop, and as we said, below 4% when they announce the June numbers in July. So what does that mean? It means that the headline number, which investors tend to look at, will be coming down and coming down and coming down. That being the case, we think investors will have confidence that the big monster that everybody's so scared of, which is inflation and the Federal Reserve raising interest rates to the sky and destroying everything in sight, will start not to be as scary and maybe start to become benign. And if that's the case, we think the market will go up, which is why we continue our fearless forecast that this year, when we celebrate the end of 2023, will have been a very good year. Now, having said all of that, what could go wrong? What should we worry about if you are one of those people that has to worry? Well, what could go wrong, and we've always said this, that profits are what drive stock prices. Okay, that's our view. It's not inflation, it's not the unemployment number, it's not the economy, it's none of those things. It's profits. If profits are rising, stock prices should be rising, and if profits are falling, stock prices should be falling, regardless of all those other things. So where do we think profits are going to go? Well, this looks like one of the most telegraphed recessions, Federal Reserve increases of interest rates, inflation, maybe ever. And so companies, it appears, have been taking a lot of steps to protect their profits. JP Morgan's numbers came out this morning. They had just crazy good profits, and they're setting aside billions and billions of dollars to protect against bad loans, to protect their profits. Many other companies should be and are doing that. And so we believe that companies are doing things to protect those profits. And if those profits stay steady, then the stock market should stay steady as well. However, there's always the risk that something the Fed broke that we don't know about right now rears its ugly head and changes everything, which is why we always believe you plan for the worst and you hope for the best. So what's the worst? We could see a major sell-off because of something that we don't know about today, but becomes headline news. That's why we have our sell strategy. That's why we believe you shouldn't just invest, you buy and hold. You should also have a sell strategy. You should protect your money as well. And our invest and protect strategy told us to sell last year in April, as you guys know, and stay out, and the market went way down after that. So we want to protect our clients from major losses. We believe that's very, very important. We think growth is important, but we think that protection of principal is even more important. Now, if you're over 50, if you are retired or retiring soon, if you're 5 years from your retirement, or you are within the first 5 years of your retirement, I'm going to strongly recommend, self-serving, I know, but I'm going to strongly recommend that you visit with one of our retirement planners. Have them build for you a retirement plan. We'll take into account your level of income, your age, when you want to retire, your income taxes, Social Security, all of that. And we'll also show you how to build in a strategy to protect your retirement. We want to worry about all this boring financial stuff so that you don't have to. We want you to enjoy your retirement as your second childhood without parental supervision. And if we can facilitate that for you, then we think we've done a very good thing. So our website again is rpoa.com. You can click on the link below this video, and we'll look forward to visiting with you and seeing if we can build a plan for you that you'll like. All right, so thanks for watching this video. Share it with as many friends as you would like. We'd love to help as many people as we can, and we will talk soon.